Let's call it what it really is. Crypto in its current state and current form is a player versus player game. There are people that lose, and that's the majority, and then there are some people that win. And especially in a market that's not expanding, where there are no new players coming in, it's 100% a game where the capital concentrates towards the fewer and fewer people. Now, some people call it gambling, but I think crypto is both a game of luck, but also of skill. There is some data that we can use that can give us an edge, thus increasing the probability that a trade works out in the end. But yeah, this is what we are currently facing. This is the stablecoin market cap in the last 2.5 weeks. So this is how much money is currently in stablecoins in crypto. And sometimes we see outflows, sometimes we see inflows. So the way this chart is going up and down is based on deposits. So when you deposit your money on Binance, then Binance will send that fiat currency to a stablecoin issuer. The stablecoin issuer then takes custody of the fiat funds in the bank account and will then create the equivalent number of tokens on chain. And the same thing goes the other way around, right? If you're withdrawing your money, then the stablecoin issuer has to send the fiat currency to Binance again, that then sends it over to you. And so with this chart, we can clearly see if money is coming in or out, and nothing really happened net in the last 2.5 weeks. Yet in the last few days, we saw Bitcoin's price going up again. So the people that are in the space, they swapped their stablecoins to more risk-on assets like Bitcoin. But again, the issue is that as we play the game more and more, and it's not 100% random, because there are some insiders and there are some people with more skill, we do see capital concentration. And that means that trading volume and activity tends to decline as there's no new people coming in. And that is what we see over here. This is the number of pump.fun transactions on Solana. First we had our growth, everybody got excited about meme coin trading on Solana, and since February of this year, this is declining rather rapidly. Again, no new money coming into the space, while the space continues concentrating the capital among a few winners, means that the ecosystem slows down. And so what I think is most important is trying to figure out where is the macro picture going. If we are currently in a bull run, then yes, it makes sense to buy the dip. But if you're currently in a bear market, that's not necessarily that smart. One way to time the medium-term price action is moving averages. And what we see over here, the line in turquoise, that is the 120-day simple moving average. So the idea is that we are in crypto, that we are in Bitcoin whenever the price is above that moving average, and that we are out of crypto, or we bet on falling prices whenever the price is below the 120-day simple moving average. So we are following the trend, and currently it seems like we are rather bearish again. Yes, there are our failed signals every now and then, but when we are using moving averages, the 120-day is actually the best. Most people just take arbitrary numbers, right? Let's say the 200-day or the 100-day or the 28-day. But I always like to position myself based on data, based on what used to work in the past at least. And so here's a backtest that has data starting in the middle of August of 2017. And I have checked all the moving averages from the 2-day up to the 200-day simple moving average. If we held Bitcoin during the time, we would have gotten annualized a performance of 19%. If we traded only according to yesterday's price, so the 2-day moving average, we would have destroyed our capital, because I'm also including some trading fees here, so 0.2%. We are going long, so we bet on rising prices whenever the price is above. So that's this situation over here. But we're also betting on falling prices. So we're not just in cash, but we actually make money when things are going down. That's, by the way, what we are currently doing. And so how well does this work? Here's again a summary of the performance. So on the x-axis, we've got the duration of the moving average. On the y-axis, we've got the annualized performance. And again, in black, we've got a comparison for buying and holding. So most of the time, this strategy of following moving averages works. The 30-day is better than buying and holding. The 100-day is better than buying and holding. And only the very short-term moving averages that generate a lot of trading signals, thus a lot of trading fees, those are the ones that burn capital. But pretty much following the trend over time is a winning strategy for Bitcoin. But here's the moving average that works the best. It's the 120 day. And so that's then how that looks like over time, right? So in white, we've got the performance of Bitcoin, and in turquoise, we've got the performance of that backtest. Now, this is a linear scale. We don't really know what happened here in the early days. Let's look at the same thing on a logarithmic scale. And we can see how we tend to short whenever prices go down and how we tend to long, bet on rising prices when prices tend to go up. So a very nice constant outperformance. Now this indicator still creates quite a lot of signals, right? Maybe a signal every 2 weeks or so, and most people don't want to trade that actively, or maybe have tax implications by trading that actively. So if we just write the cycles, maybe that's a better medium term to long term strategy. And so yes, the short term looks negative. We are below the moving average, but even the longer term, I believe, doesn't look that great, because this is the Bitcoin realized price. This is the average cost basis of the market. If the market in aggregate is in losses, that's the best time historically to buy. But currently the market is still in aggregate in profit. And only once we fall below $44,000 do we have a long-term, very good entry opportunity. So both on the long term, but also on the medium term, it doesn't look that great. Here's another long-term indicator. This shows the trading activity among the short-term traders versus long-term traders. And we should be selling whenever the market is heated. We should be buying when it's only the long-term traders that make transactions. And currently the market is cooling off, but we are not yet at dirt cheap levels where it makes sense to bet against the general momentum. And so again, I think the macro picture is much more important than just looking at the news of today. If today is going up, a lot of people might get euphoric and say, hey, we are now recovering again. But we can't always be bullish, right? Otherwise, we get caught up in those bear markets of 70 or 80% just in Bitcoin. And then, of course, the altcoins go down even more. In a bull market, it's time to buy the dips. In a bear market, it's time to short the pumps. So to bet on falling prices whenever we are rising, like on days like this. This is a short opportunity, not a reason to be bullish again. A reason to be bullish is when we are below the average cost basis, or at least when the medium term becomes somewhat optimistic again. But for that, Bitcoin has to go above $93,000. Is that going to happen? I am not so certain. People buy the dip and the dip keeps dipping, and they buy the dip again and the dip again. And then at some point they run out of money. And it's all just because the macro picture was completely ignored, right? It's all just because people don't know at what point in time are prices actually cheap. But yeah, I'm betting on falling prices since Bitcoin hit 100K roughly. Those are trades that have been made by the community, right? So those are all short trades betting on falling altcoins, because altcoins, of course, get crushed even more during times like this. Bitcoin is going down, but the altcoins go down even more. And so yes, while most people are happy today that things are going up, I think this will flip very soon. Again, based on the data and based on the approaches that worked well in the past. Most people are simply too scared to bet on falling prices. Most people don't really have a plan of what to do in a bear market. Most people just quit the market entirely and then enter too late when the bull market returns. That's why I've created dedicated tutorial videos on this topic. How can we actually build our portfolio consistently while most other people lose? So that in the end, we've got an even larger portfolio at the bottom of the bear market that we can then nicely deploy. Most people run out of money at the end of the bear market. We have built more deployable capital to then take full advantage of the next altcoin season. Now, a lot of people lost money during this bear market. That's why I've reduced the rate from 165 to 125. There's also a 1-week money back guarantee. So in case you don't like the premium membership, just message me within the first 7 days and I'll refund you 100%. The link is down below. It's thebitcoinstrategy.com. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.